warm welcome on behalf of the UNIQA management team, today represented by our CFO, CRO Kurt Swoboda, our board member for international business, Wolfgang Kindl, and by René Knapp. I think you all know us very well. René is responsible for asset management and direct line. It's an amazing story. 1 year ago we met here, pretty much condition. Since then the stock price moved a little bit. And some of you told me already at the entrance they're looking forward to the Capital Markets Day 2027. 36, sorry for this. Maybe we have a similar development. No, joke aside, many things happened in the last couple of months. On the geopolitical side, also in those countries where we are operating, we saw some emerging developments which basically have been not so good for the whole European continent. If you think about Ukraine, if you think about Russia. But on the other hand, we see a lot of opportunities for those companies who have a vision, for those who are bold, for those who see growth potential. And this is what we do see. We are very happy that we can have hopefully 1 hour of your time. 1 hour, we'll start with a short summary about recent developments and most of all, what is ahead of us. Afterwards, Kurt will provide you with some updates on the financials. Then we got, I think, 2 very interested market sections. The first one provided by Wolfgang, who runs international business, so about the CE region, followed then by Kurt once again about the Austrian business. A deep dive, similar like 2024, on the personal line insurance, because it's of super relevance for us, and then a wrap up at the end. So if your time still allows, afterwards we got something like 30 minutes for your Q&A, and then hopefully time for have some drinks and dinner and stuff like this. 2 main messages. First, the cornerstones of the equity story, which we showed to you 1 year ago, did not change at all. So the cornerstones are the same, but what changed, as you saw, is basically the outlook. So we provided you with an update that we upgraded the outlook, and the outlook basically in a double meaning. First, we upgraded the targets for the next 3 years, and second, on a different base, meaning on a leverage base, because the year 2025, as you might have seen, will be much better than anticipated. So frankly spoken, there's a double effect on this upside. Company did not change. In the middle, there is this blue-colored country, it's Austria, where we come from. You know we are active there for more than 200 years. Very stable market, supported by everything which is right of Austria, and this is basically currently globally the fastest growing insurance market. I didn't know if you know, this is much faster growing than the emerging markets in Asia currently. Of course, heavily driven, as you will hear afterwards from my colleague Wolfgang, by Poland, which is not only in the European Union, but also in the UNIQA universe, the growth and the profit engine, and which is supposed from our side to remain on the midterm perspective. The yellow part of this map shows basically where the really growth boost, especially in the very profitable P&C business, will come from. Then you see that basically, and you heard it from Wolfgang last year, everything which is on the Balkan, on the West Balkan side, so basically between Romania and Bosnia, at UNIQA is summarized in one region, a region which by next year will have a top line volume of 600 million euro, which will contribute something like 60 million euro profit before tax. So we don't fuss around with a small nitty-gritty market there, another one. We treat it as one region, we manage it as one region. Country portfolio changed a little bit because last year we had 3 small minor countries in the south, basically still on the map. North Macedonia, Albania, Kosovo. We sold those markets because we want to focus on those core markets. And then you will have noticed that there are 1 market, 2 markets in the east on the left part, in the west on the left part of the slide, colored in green. And a couple of words why they're colored here in green, why they're on the map. We have Ivana Stark with us. You know, Ivana is managing our reinsurance company in Zurich. This reinsurance company in Zurich has, first of all, the function of really providing reinsurance solutions to our companies inside the group, so they don't do what they like on the reinsurance side. We have a competence center. Everything which got to do with reinsurance is handled from Zurich. That's the one thing. The second thing, there's an option to explore the business carefully on a very profitable side by providing external reinsurance solutions. You will hear more about this from Kurt afterwards. So this also that you have it in mind. But overall, still a company which by the year end will have an increased top line of roughly, as you see here, 8.3, 8.4 billion euro. Bottom line will grow much stronger in a range between 490 and 510 million euro. Still very happy and privileged to serve something like 17, 18 million clients with the clear ambition to be there at 20 million clients in the next couple of years. And as I mentioned, altogether present in 14 markets in the region. No plan, no idea to expand to Western Europe. Doesn't make sense for us to be there number 20, 25 on a huge market. No idea to expand to other markets in Eastern Europe. Those, ladies and gentlemen, are our core markets and will remain on the midterm perspective. If we move on to the next page, please, then we see one word which describes UNIQA as its best, similar to last year, it's diversification. So I talked about the country diversification, UNIQA number 2 in Austria, number 5 in Eastern Europe. If then you move to the right part of the slide, you see the composition not only by geographics, but also by product groups. Geographics first, 57% of the portfolio of the book is written in Austria, 43% internationally, with a very strong tendency to grow. So you can expect that this basically composition will be 50-50 in the midterm perspective. Second, product groups. You see here on the very right part of the slide, in the bubble, 60% P&C business. In a couple of minutes, you will see currently the combined ratio of 91% net. 91% net, which is really, I would say, amazing and very good KPI at the moment. Around 20% coming from the Austrian health book, and around 20% from the life book. But also here, you see diversification. If you then move down to the south, on the right part of the slide, you see also diversification by distribution channels. Still dominant, basically, the huge network of tied agents coming from Austria mainly. But we also have, as you can see here, cooperation with all relevant brokers in the region. And of course, we got a very strong distribution agreement with one of our main shareholders, the Raiffeisen Banking Group, which currently holds 10.7% of the share capital. In Austria, a cooperation agreement, but also internationally. Now, where's the growth coming from? In the first 9 months, we saw overall 9% growth on the top line, 11% coming from the P&C business, 11%. Again, combined ratio of 91% and 6% from the health business. Those, as stated here, are the relevant growth engines, not only for 25, but also for the upcoming years. Having said and having mentioned a few times now the first 9 months 2025, let's have a look on them on the very right part of the slide. So we anticipated to you and we told you that our overall goal on top line is to have a CAGR here, as we see, of like 5%. 9.2% after the first 9 months. If it comes to the admin cost ratio, 14.5%, clearly below our target of 15%. Combined ratio net, as I mentioned, below 94% at 91%. You will mention now, okay guys, but you had no nat cat, no major nat cat events in those first 9 months. This is true. But even if we would have experienced something like the last year, in the meantime, we would be able to digest it. You will hear afterwards from Kurt and Wolfgang how robust basically our basic portfolio is. It's predominantly a very healthy retail portfolio and a very healthy risk-adverse corporate portfolio. So everything what we basically describe as attritional claims, we do have under control. So this means if a nat cat would happen in Poland, in Czechoslovakia, Hungary, Romania, Austria, we in the meantime, due to the size of the portfolio and the really good underlying claims ratio, would be able to digest it. What you can see here, of course, in ROE, which is clearly above our target of 12%, 14.5%. Solvency II ratio didn't change, 283, 284%. So basically everything in line with what we promised to you. One thing still to solve, this is the CSM, you see it here. It's a combined contractual service margin of the life and the health book. It's a clear mismatching of our target. It's a green light on the health portfolio. We are at 98.5% in the health portfolio, 98.5%, but we are just at 53% in the life. So there is still some room to grow on the life business, both in Austria, predominantly in Austria, but also on the international side. The enabler, which is really very crucial for us, and not just a kind of saying, you find here on the right part on the bottom. This is first a customer satisfaction index which currently is at 4.6 stars out of 5, and the employee engagement and employee satisfaction index, which also currently is above our target lines. We do say this because we really believe that's a people's business. You have a hands-on management, as you know, in front of you. We know where our success is coming from. It's from sales, from customer management, and this is why we have to have really engaged young people in the group. We have to attract young people who are super fit at AI, super fit at IT, digitization, and this is why this indication is relevant for us. How does this uplift look like, this upgrade? First of all, we increase the top line. Once again, on base of what we will achieve by 2025. Not 5% CAGR, but 6%. We increase our assumption for the bottom line from 6 to 7% earning per share. We increase our ROE target. You remember, you see it here, it was 12%. We said it will be north of 13%. The rest, basically, we keep constant, right? So we keep constant the admin cost ratio. We keep constant the Solvency II range, saying between 180 to 30%. We keep constant our payout ratio, which you can expect to remain between 50 and 60% of net earnings, as we told you. Having and providing to you a progressive, meaning growing dividend year per share, year by year. So this is, again, what we'd like to underline. Now, frankly spoken, why are we 1 year ahead of our plan? What's the reason for this? You find some arguments here, some indications. So overall, as Group CEO, I must state that we are much better in the execution of our plans than we anticipated. Now I must say, okay, Andreas, you are also now CEO for a couple of years. How comes? You don't know your company? Yes, all of us guys, I think we know our company. But frankly spoken, we did underestimate how quick we have been managing to speed up. And what we see in our books and what we have as our budgets gives us really confidence that we can keep this promise which we give to you today. So this is the overall thing. First, we are much better in execution. This is why we are 1 year ahead of plan. Second, if you look to the Austrian part of the business, we expect, even if the market is quite stable and mature, and we had in the first 9 months a growth of 5% in Austria as UNIQA, we expect first that we will manage to run the P&C book on a really improved combined ratio, a very good combined ratio, which you will hear from Kurt afterwards, which we see after 9 months. So we will see this also in upcoming years. We are quite conservative. We are super good in risk management. In the meantime, we can implement a pricing tool, which we learned from our Polish colleagues, our Czech colleagues. They implemented it in Austria. And very important, we expect that the health book, where we currently have a market share of 43% in Austria, that we will increase in a profitable way writing of new business there. This is basically, if you ask me, one of the most interesting products which we have in this region anyhow, also in the whole market of Austria. People just really don't believe anymore that the government, that the public sector is able to provide healthcare solutions. They don't believe it anymore. And when I was entering insurance industry 28 years ago, many people did savings, right? Life insurance, stuff like this. They changed. In the meantime, everyone in Austria buys health insurance. We have currently, out of 9 million people, 3.6 million who bought already health insurance, 3.6 million people out of 9, which is more than a third, with a very strong tendency. And it's not only the high income level, the high income group of the country, all income groups of the country basically in the meantime are aiming for health insurance. This is why we expect there to keep our market share of 43% and maybe if we're good in new business, in a profitable new business, even to increase it. Turning to CEE, to the right part of the slide, you will hear from Wolfgang afterwards why we are so confident that based on the Polish, on the Czech, Hungarian, Romanian experience, we will keep this very strong growth, especially in the P&C book, at very attractive combined ratios. There is one key element which you can add to my quote about that CEE is currently the fastest growing insurance market worldwide, stronger growing, faster growing than Asia. And this one element is that Wolfgang and his team, they are confident, and we are confident, that we in all those markets can outperform the growth of the market by at least 1/3. Okay? So it will be for us a clear target that we are growing above the market, and this is like 1/3 above the market is our target, okay, in a profitable way. If we move to the 3 product groups, I think I told a lot about P&C. One comment about the life book, we have to work on the composition of the book. We look more and we have really promising success on selling capital light products, not only in CE, but also in Austria. And you will hear also from Kurt afterwards that we have a special focus on biometric risks, especially in Austria. Those products, as all of you know, deliver high value, a very attractive new business margin, and will give us an additional boost. So at the right, health insurance, I think I told everything about this. Once again, this is predominantly an Austrian business. We're a market leader, but you can expect from us a higher growth than in the past. So in a nutshell, this was a summary about the story, about the uplift, which I try to describe you right now, and about all the details on the financial side. I may hand over now to Kurt.
Three key drivers I would like to highlight in the beginning that gave us the position to be ahead of the plan. P&C, health and asset under management. So dear colleagues, welcome here in the center of London, and also happy to have you again here, and thanks for coming to our Capital Markets Day here in London. I'm starting on purpose with these 3 elements because they are the key drivers that turned out during the year 2025 to be on a sustainable basis our elements for the profitability in the future. So let me start with P&C. We have 2025, a year where the growth was much more higher than expected, and the basis that we built it up so far, and which is also then the basis for the plan 2026 to 28, is of about, in terms, around 150 million euros only in P&C higher than the old plan was. On this basis, then we grew, which we'll see in a minute, we will grow by 7% in the future. So this is one part of the plan ahead that we have. The second thing is the health business. The health business is, you know it, one of the cornerstones of UNIQA. The health business is one of the USPs of UNIQA, and the health business is also in the future, also in the new accounting scheme, the driver for profitability, which will go up to more than 10% of the EBT share of UNIQA. And secondly, we use opportunities in the market, and also we'll talk about asset under management, will give also us a boost in terms of our new targets that we will present. This is also embedded in 2 elements I would like to highlight. The first one is the combined ratio. Andreas already mentioned it, because to be on a sustainable basis below 93% on a net basis is something that gives us also the confidentiality to achieve our targets. By that's correct, no nat cuts this year. We will use the year 2025 to build up reserves to buffer up the nat cuts that we expect in the next years. So this is not a year that we will see in the next couple of years again. So we calculate minor nat cuts and even bigger ones in the upcoming years. Reinsurance is one coverage we have. The nat cut competence is another one, but to have also a balance sheet which is clean, a balance sheet which is strong, that we can also absorb events like Boris, for example, last year. And finally, the ROE, which is more than 30%. I would say in that case, CFO being on the north side of the 30%. So in that case, also a strong improvement on the return on equity. So this is the introduction. So coming back to P&C, you see here the 7% growth I talked about by an increased number and volume in 2025. Yes, ladies and gentlemen, it's also the case that this is the retail business, the corporate business from our 2 strong segments, Austria and International, plus a little bit the external reinsurance that was mentioned so far. We expect in that kind this year around 300 million on volume, slightly increasing over the years, but not too fast, not too risky, stepwise, and this is also part of the P&C story in the future. Key for us is that we bring down the element which is driving the combined ratio in the P&C business. This is the so-called attritional claims ratio. So the claims ratio that is reflecting the basic claim in our retail and in our corporate business. We don't rely on things like discounting. We don't rely on things like runoff. We don't rely on better reinsurance construction. This is maybe an add-on, but not something that is a sustainable basis for the future. To bring down the attritional claims ratio from very good 61.7% at the moment to below 60% is the key element for the profitability in P&C. How to do so? This is on the one hand, the sourcing of pricing. This is on the other hand, the question of which portfolios we are in and which portfolios we are not in. And the third one is we grow very fast, but not in each element of the P&C side. So we have also exclusions. For example, in the big cities and the CE regions that we do not take every car in that respect. So also in that case, a very risk-averse growth in that respect. When we talk about health, we have two elements that we have to highlight on the one hand. The first one is the growth. The growth in health is completely different than we talked about here last year during the Capital Markets Day. Why that? René Knapp and his team have been heavily working on new products, and these new products give us also opportunities of more growth. Secondly, we see that the market, especially in Austria, and health is a topic which is predominantly important for Austria, is more and more growing. The demand on health ecosystem is in Austria higher than we expected. And with this, we are able to grow by 7%, or in terms of volume, by 200 million euros more by the end of 28 than we had in our old plans. 200 million more volume with a new business value of around 9%, a profitability which is also supported by asset under management, gives us also the confidentiality that the impact on the group EBT is increasing by up to 10% in respect of now 5%. So doubling the impact of EBT in the health side. Now, maybe let's talk about half a minute on the CSM, which you can see on the left hand of the slides. So we have two messages we want to drop in that respect. The first one is, on a first glance, it turns out that maybe with 99% CSM ratio, so that means the new business in relation to the outflow business is okay. But generally, it is operative more, because what we invented now and what we are now measuring internally is the so-called operative CSM ratio. So that means we exclude all external factors on the business which we do not have in our hands. It's the interest rate, this is model changes that we have to do from authorities. So what stays is price, costs, and the product itself. And with this, the calculation after 9 months shows that we have 122% sustainability ratio. So this means 22% more income than outcome of profitability. And this, if we move on this slide on the right side, and this with a very cautious release pattern. In comparison to our peers, we are in that case roughly 9% slower in the release pattern in the CSM. And this we do on purpose, because we have a very sustainable business, 31 years on average. Secondly, this gives us also the confidentiality that maybe even in bad years, with more lapses, with maybe impacts from the political side, whatever happens, we are stable and we are sustainable in the release. And this is for us a purpose that we take on in that case for us. Last topic I'm mentioning in the beginning was the asset under management. Just to remind you, IFRS 17 and as our strong personal lines business gives us two ways of thinking in asset under management in the P&L. If you look on the side, the upper angle of this triangle is the balance sheet. So everything which is coming from life and from health business, we can say, is going through the contractual service margin into the P&L. So that means in health, as I said, in 31 years, and in the life business around roughly 11 years. So a profit of 100 is by the CSM divided by 32 years coming into the P&L, a very long time. Differently in the P&C business, this is directly impacting our P&L. And this is what we wanted to highlight because we also upgraded our run rate portfolio in the net financial result of around 250 million euros. This because we have higher new money yields, this because our average yield in our portfolio is very stable, and this gives us also a good momentum in the EBT contribution of the assets under management. The average investment grade is around BBB+. That sounds a little bit maybe not that good, but just to remind you, we are in 14 countries in the CE region. We are investing in those countries, therefore higher investment grades. Yeah? But on the other hand, of course, with risk mitigation and with a high diversification within the UNIQA group, also better returns. And this is for us also a momentum that we would like to use. I think this slide you know, and this is certainly one of those slides many of you are questioning if this is the right target or not. Just to state here also again, like last year, no, we are not thinking of a share buyback. No, we are not thinking of a bonus dividend because we have no bonuses in that case. We do not sell anything that is out of reach and out of range. Therefore, we stick to our target, which is 180 to 230%. And yes, maybe we have now an overcapitalization, but let me just explain you where this comes from. There is the increase of Strabag. The market value of Strabag is for us around 10% of the solvency ratio. Then we have the interest rate movements, another around 10 to 15%, which give us at the moment a better solvency ratio. Both elements I'm happy with, but both elements are very volatile and we cannot rely that this stays like it is. And then what stays is that we take around 20 to 30% of this overcapitalization, to say so, for possible M&A activities, goodwills that we can buy in and that we can absorb. And this is the reason why we are happy with this high solvency ratio. And by the way, this helped us also, and you have read it maybe this week, that S&P upgraded UNIQA's rating to A on a holding level and A+ for the operative companies in Poland, in Austria, and UNIQA Re. And this is important for us. And also the strong capital base was one of the pillars that S&P upgraded us in that respect. My last slide is about cash, it's about dividends, and about how EBT and ahead of plan is transferred into cash. The first one is, on the left-hand side, you see the comparison, what we showed last year on cash to group, cash to holding, and what it is now. So that means, on average, we are contributing more than 50 million euros on cash to group. And this is automatically and with the same amount transferred into the growing dividend. So yes, we're also by the same amount of payout ratio, we stick to 50 to 60%, but the basis is higher, also in that case. So it means also the absolute dividend will grow in that respect. And this is funded by cash from all of the countries and from all of the units at UNIQA. By a good diversification in the cash remittance between Austria, UNIQA Re, and International. So that means 3 pillars and not only 1 or 1.5, 3 pillars which are contributing to the cash to holding. And lastly, the leverage ratio. The leverage ratio calculated in 2 ways. Why that? Because on the one hand, Standard & Poor's, they say, okay, we are focusing on a leverage ratio without calculating the CSM. And lastly, our internal one, the economic one, because we have a strong CSM. You see 4.5 billion euros. You can translate this in a way of these are economic profits for the future. And with this, the leverage ratio is about around 70%. Important for us because this gives us also the basis for funding maybe investments, M&A activities in the future, and for us a strong position in that respect. So far, my messages in terms of where does the profit come from, about the solvency ratio and cash to holding.
Many thanks, Kurt. I have the privilege in the upcoming minutes to provide you with an overview and insights into our international business. I think the first page here with the KPIs displayed are strong evidence that we as a group with a history of more than 200 years successfully transformed from an originally pure domestic company to an international player, currently being top 5 in Central Eastern Europe. Let me start like last year with the biggest asset we have generated and we have created over the last 2 decades. This is our customer base, a customer base in Central Eastern Europe, which nowadays represents 80% of the group-wide customer base. So these 15.4 million customers generated last year a premium income of more than 3.2 billion euros and a profit north of 200 million. And I think the first 3 quarters of this year are a confirmation of this trend, of a trend of profitable growth. You see here that for the 3rd consecutive year in a row, we are growing 2 digits throughout the region, outperforming the overall market performance. It's a very profitable growth. This is displayed with a combined ratio of 86.2 gross before reinsurance. And it generates, at the end of the day, after 3 quarters, a profit of 184 million euros. I think this is not only a confirmation of the successful trend and the records we have displayed over the recent years, it's also strengthening our competitive advantage within the top 5 players throughout Central Eastern Europe. I will also point it out later onwards. If you look to the profit contribution per country, I would say it's not a surprise that the big, more mature markets, Poland, Czech Republic, Slovakia, are the main contributor to this profit. But I also want to draw your attention to the fact that we managed now in SE also to turn a really fragmented market landscape into a very profitable one, also contributing meanwhile significantly to the profit of our group. And last but not least, as well, our presence in Ukraine, which is also driven by our values, in addition, even delivers economic success, as you see here. And what I can say is from the very moment onwards, when we decided to stay in Ukraine back then in 2022 until today, our company in Ukraine delivered roughly 55 to 60 million profit aggregate over the period of time during the war. When you see the business mix, how the distribution of the line of business looks like, this is more or less mirroring the market. Predominantly, CE is a P&C market, strongly driven by the motor market. Life accounts for roughly 24%. Health, completely different story than in Austria. Annual contracts, no aging reserves, is minor underrepresented in Central Eastern Europe. We have even a slight overweight in comparison to the entire market. When it comes to the profit contribution from a line of business point of view, we are very proud that we have a very balanced view on that, between life and non-life. René will afterwards give you insights to our very profitable life book in international. Let me turn to our profitable P&C book. This chart displays 2 things. On the one hand, and I think this is remarkable, we doubled our premium income within 5 years. You see it here from roughly 1.1 billion up to 2.3 billion last year. And what is very important, 2/3 of this growth was driven by organic growth. And it was mainly driven by really an accelerated growth path right after the successful integration of the AXA companies in Poland, Czech Republic, and Slovakia. You see it that we were really gaining a momentum from 2022 onwards. This goes hand in hand with a high profitability. Everybody familiar with the region Central Eastern Europe, I think will confirm that the combined ratio gross, leave apart last year where we had severe NatCat events, a combined ratio of 86% is really something best in class. And what is also very important that this combined ratio already includes a lot of local initiatives and also of group-wide initiatives where we, on top of our incremental improvement on a local level, also try to push our group ahead to the next level and building and creating the future of the promising insurance markets in Central Eastern Europe together. Why we are of the opinion that we are at the right place to be? Andreas, you mentioned it. If we believe in the analysts, and we do, Central Eastern Europe, if you look to the CAGR of 24 to 28, is the fastest growing insurance region worldwide. even outpacing emerging Asia. I think this is very important. And this trend is, of course, clearly supported by a convergence. You see here the insurance density and how this is catching up towards, for instance, a mature market like Austria. But please take into account that even the so-called mature markets in Central Eastern Europe, like Poland or Czech Republic or Slovakia, the level premium per capita per anno in Austria is 3 to 4-fold higher than it is in these countries. But the pace how they catch up is 4 times faster than the premium growth per capita in a mature market like in Austria. And UNIQA, and you see it as well here, the CAGR of the recent years is outperforming this market growth by 30%, roughly 30%. So we are in the fastest growing insurance region, we are well positioned as a top 5 player, and we are outgrowing the market. And definitely this is why it's mentioned here. Also welcome our CEO from Poland here. Poland is definitely one of the key cornerstones of this development of the entire region, but also for the development of UNIQA. Very important to mention is that the insurance market is even outperforming the very impressive GDP growth rates we are seeing. And very important, if this market develops with this pace we have recorded over the recent 2 years, by 2030 the market size will reach the market size of Austria. And UNIQA Poland is definitely well positioned to leverage this. Margin this year, we are growing 4 times the market growth, with more than 60% market growth. We are clearly outperforming the local Polish market, which currently displays a growth rate of roughly 4%. How we are scaling our Central Eastern European business. On the one hand, we have a clearly focus on a strategic country portfolio management. This includes M&A transaction, this includes post-merger integration projects, this includes really massive transformation projects like SCE, but this also includes selective strategic divestments of subscale countries we could not embed in this harmonization process. And if I talk about a harmonization process, you see that we scaled down from 13 business units down to 5 core markets in Central Eastern Europe. This is very important. If you see the average premium per business unit, we increased this by 7 times. Now you might say, why is this so important? It is very important because thanks to this, we can leverage to the full extent best practices in the countries or key strategic initiatives we are running across the entire group. You see here some highlights of our countries. If I turn your focus on Poland, definitely our team there is leading in pricing excellence. Without any doubt, we are leading in pricing in Poland. This also allows us to be the leading direct insurer in Poland. And I would also see us in a leading position when it comes to an omni-channel approach. So out of this, we are benefiting throughout the entire UNIQA international portfolio. You see in the first 9 months, a quite significantly improved motor book in the Czech Republic and in Slovakia. This is also driven thanks to the very close cooperation with Poland. You also see here, I was talking about transformation projects. We really successfully managed, and Andreas, you pointed it out, to put 6 countries in Southeastern Europe under one umbrella, to harmonize the product landscape, to harmonize the process landscape. And what we have achieved in the first 3 years of this project is that we increased the profit by 30 million euros, 3-0, in comparison to the standalone profits of each and every single country. So tremendous achievements. The divestment in Albania, North Macedonia and Kosovo was given by the fact that it was not that easy to integrate them in this SCE6 project. Nevertheless, we fully compensated all this out of this divestment. On the right-hand side, you see a second focus, and this is very important to mention. We have here broken down our customer segments. You see retail, you see corporate, and you see bank assurance. Within UNIQA, we started really to put the customer in the center of our organization, in the center of accountability and responsibility. You will not find in any single board of UNIQA someone responsible for sales or for insurance technique. you will find someone responsible for a retail corporate bank with an end-to-end responsibility, from product and services over processes to distribution. And I think our sustainable growth and profitable growth is also safeguarded by the fact, what you see here, that we have really a diverse distribution mix. Is it on the retail side, the mix between our own sales or independent sales? You see it as well on the bank insurance side, where the key strategic partnership with Raiffeisen accounts for less than 60%, where we are very proud, Martin, that we prolonged the partnership with mBank, which is also a great witness of the great performance of UNIQA in the region, because mBank decided to prolong this agreement for another 12 years with a cumulative premium volume of roughly 3 billion euros. This is something which is really outstanding and what we achieved on top of the successful post-merger integration. Turning your focus to the corporate business, what is here really unique and where we differentiate from many of our competitors. More than 50%, almost 60% of our corporate book is small, medium enterprises. It was a clear key strategic initiative within our group. We put a focus on that, and over the past 3 years, we were growing our SME book premium-wise by roughly 300 million euro organic growth. Nowadays, we are serving more than 580,000 SME clients throughout the region. This, of course, also safeguards our profitability because it's balancing out volatility in the corporate book if you have too much exposure to large risks. Finally, first of all, we have a unified and harmonized brand appearance. Now you might say, okay, is this a philosophical question? I don't agree. I think it's very important that our more than 15 million customers, and we want to grow this midterm up to 20 million customers, have one harmonized brand experience throughout the entire region. This is one of the differentiating factors. Now you might say there are other global players there. You're absolutely right, there are global players. We have the regional focus, which a global player never can have out of his portfolio structure. So for us, leveraging this CE growth story is in the focus. Yeah? Second, we are leveraging scale and expertise. I mentioned before, sometimes key strategic initiatives across the entire group. You have to note that in addition to the traditional line organization, we have created over the recent years in the entire group, international including Austria, an agile cooperation model where we are driving on the one hand best practices across the countries and where we are also driving key strategic initiatives, the blueprint for such initiatives, which are then mirrored back to the countries in order to drive operational excellence. And this is outstanding. We have 1,000 people in these communities, and this is cross-border, cross-hierarchies. This is purely skilled and functional driven. What is required in order to shape the future of our group and to shape the future of the local insurance markets. Third point, omnichannel transformation. Many people are talking about omnichannel. I think they mix up omnichannel with multi-channel. This is where we have been in the previous years. This is where we have changed, especially in Poland, and from there we will spill it over across all countries. This means that we have a customer experience, a seamless customer experience across all the distribution channels. For this, you need pricing excellence. For this, you need the technical capabilities and skills in place. We have it. And last but not least, we are convinced that UNIQA is not only a partner for risk, UNIQA is a partner for risk and resilience. Yeah? And we will mention it later onwards. We are really exploring what we also sometimes say, this vertical integration, not only in distribution, but also, is it a health ecosystem? For instance, in the entire CE region, you see it here, we contracted more than 15,000 providers. It's not only just taking the risk, it's also providing access to medical facilities to our customers. And last but not least, we founded UNIQA Sustainable Business Solution. We successfully rolled out now in 6 countries, where we target with our ESG services our tremendous SME customer base of more than 580,000 SME customers. This is in a nutshell our international story. I think we are on track. Here I do not want to repeat what already Andreas and Kurt mentioned, just two key messages. First one, growth of 8%. You might challenge because we are growing for the third year 2-digit. What is our promise? What is our commitment? We are growing 1/3 faster than the market. Please remember, we said if we believe in analysts, they predict 6% for the CE region in the upcoming years. This is why we end up with 8%. The gross combined ratio of 86 allows us really to finance and to invest in our future. This is already embedded in this combined ratio. And all in all, if we fulfill these ambitious targets, we will increase our dividend payments towards the group by 30%, coming close to around 200 million euros in the upcoming years. Thanks for your attention.
So this was the growth story, and now UNIQA Austria, the optimization story. Boring, maybe, but super important for UNIQA. So therefore, let's have a look on Austria market itself. I think you know about Austria, nothing to explain in that case, but just that we can have the same page. Austria, we have around 4.5 billion premiums in the home market, Austria. Secondly is we run there a business, which you can see on the left-hand side, which is life, health, and P&C, with predominantly a P&C side. Therefore, around 60% is coming from EPD, is coming from P&C, and around more than 50% for the premium is coming from P&C. And therefore, when you talk about optimization of the portfolio, it's about optimization on the P&C portfolio. I come to that in a minute. Thirdly, very important is Austria is a market very, very traditional. You can see here also the share of digital and others, very, very low. Do we believe that this changes? Yes, but not in a short term. This is a long-term process that this changes to more digital. Austrians, a little bit of self-critical, we are hybrid, so that means we inform online, but we buy insurance offline, okay? So this is therefore important that you understand that we have this high percentage of tied agents and employed sales guys, roughly 2,000 people for these two perspectives, plus brokers from very big ones to very small ones in a number of around 4,000 brokers in Austria. So in a total, around 6,500 people are working for sale for UNIQA. 6,500 people. I had a look before I came down and said, okay, how can I explain 6,500 people? This is the auditorium for the Royal Albert Hall here in London. So that means a huge amount of people, a huge number of people working for our sales and distributing and working for 4.5 billion on premiums. Sounds a little bit weird, sounds a little bit very costly. Maybe it is, but it is the case in Austria. And therefore, for us, super important to keep our position number 2 in the P&C side, number 1 in the health side, and number 2 also on the life side. This is setting the scene for Austria. I talked about growth. I talked about health in my section on finance risk, about the 9% margin. Now let's a little focus on the P&C side. So we run the business here on a gross basis of 90.5% in a year with no nat cuts. Sustainable, we see it here between 91, 92, completely different than you heard about Wolfgang. They are below 90% international business. And we talk about also portfolio optimization on the life side. Product-wise, and René will talk about, from a financial perspective, I say roughly 4% new business margin is okay for life. The topic in Austria is the volume. The topic in Austria is that, even here a little bit of self-critic, Austrians are very, very shy of doing other things like the Sparbuch and the Bauspar product. So therefore that means we have to also invest a little bit in awareness. We have to invest in the understanding what does this mean to have a life insurance or others for my pension. What does this mean, especially for the generation which is now coming out of university and of school. This is the potential that we see in the life business. Another potential is the restructuring of the profitability and the pricing. We have, with the acquisition of the AXA, as you heard, a huge USP in the pricing. And this USP in the pricing knowledge is not something that we have now invented in Austria, and this shows also how the group is working. this is something that we took over from Poland, and now with also the new IT platform in Austria, we can use also for better pricing, for having here a very variable component for our sales guys when they talk to the customers, and have here also the possibility to have different pricing streams on the products. This is important because we want to bring down the combined ratio also to below 91%. And when we talk about P&C in Austria, we talk about retail business. Corporate SME is growing, is okay, but this is another topic because here we have the sanitary restructuring of the portfolio. So meaning retail, this is the story of the optimization. Another story is, and I mentioned this in my sentence before, is the restructuring of the corporate book. The corporate book, which is large corporates, 12% share of our P&C side. Years ago, we started to have huge book in that case, but UNIQA made mistakes. And to repair these mistakes took time. We have been investing. We have been selling and having products in South Tyrol. We have been selling topics of transport insurance. That means ships that are crossing the Panama Channel. We have been investing, or we have been heavily policies in terms of liability in hospitals. So 3 elements where I say this is not our DNA. This is not that where we have the expertise. And therefore we have to restructure this portfolio. This takes time. We started on loss ratios 140% and north of it. And we are now down by 60 to 70%. And this restructuring, you can see it on the bullet point on the right-hand side, brought us around 20 million so far. And this is ongoing and will increase, in that case, also the profitability of Austria. So that means this is not a growth story in Austria. Yes, also in health, but it's more the optimization. Therefore important because Austria is the backbone of the group, and this will stay the backbone of the group. Second thing is we have to build stronger in the leading position in health. Thirdly, the strong sales power with around 6,500 people I explained to you is something that is a USP in Austria. Okay, traditional, but it is like it is, and we have to keep this up and running. And the last thing is we started an IT transformation in 2017. We talked about, we invested heavily, more than 500 million euros. And now we are earning the fruits. Life is done. P&C is coming for the next 2 years. And this IT transformation gives us also then the possibility to be more cost efficient, including artificial intelligence. And leading to those numbers, I think you know them. For me, important is that you take away these elements about Austria's optimization. Thank you.
Yeah, thank you so much, Kurt. In the next and final chapter of today's presentation, we want to put your focus on the group's health and life insurance business. And I will walk you through the areas where we do see growth opportunities in the upcoming years, and also be specific about our targets in the upcoming years until the year 2028. Let me start with a very simple but important overview. Speaking about the life and health business, you see on the left-hand side the split of revenue, where roughly 40% of the group's revenue is coming from those 2 business lines, well diversified between health and life. Meanwhile, health is dominantly driven, as Wolfgang mentioned before, by the Austrian market. 90% is Austrian health insurance business, and the life portfolio is currently well diversified, 50-50 between international and Austria. If you look to the profit contribution, those business lines contribute almost 50% of the entire profit of UNIQA Group, and therefore it's important, if we speak today about future growth and future improvements on the bottom line, that we speak also about these lines of business. In addition, it's important to know that especially due to the nature of the business, we speak about very long duration business, especially on the Austrian market in life and health. We build up in our balance sheet a quite relevant contractual service margin, which amounts end of September up to 5.8 billion euro. And this is also a factor which is ensuring stable and long-term profits coming out of these business lines. Let me focus first on the health insurance business. We have heard already a couple of insights from Kurt. 3 messages. One, how is the private health insurance market working? How is it functioning? Private health insurance is an additional insurance coverage to our public healthcare system. So it's an add-on insurance cover. And the two main characteristics are, we speak about lifelong contracts with the opportunity or possibility to adjust premiums on an annual basis. That's very important for us because therefore we can keep pace, especially with medical inflation. That's one characteristic. The second one, also very important, we do build so-called aging reserves that remain, in the case of a surrender of a customer, within the company. That makes it very unfavorable for our customers to surrender these policies, which means lapse rates are very low, which make the profit and the business in general very sustainable, and which is giving us a frame with both aspects, the premium adjustments and the aging reserves, that we are able to run in the general market, in the market in Austria, these business lines very profitable. That's on the business itself. If you look about, we'll have a look to the market grows. As already mentioned, in the meanwhile, 3.6 million persons are privately insured on the Austrian market, which is 40% of the population. This number was significantly growing in the last decade. So it was historically good growth in this business. Especially in the recent 2 years, we see an even accelerated growth due to the fact that the public healthcare system is under pressure. We still have a quite good quality on the Austrian market, but nevertheless, for example, waiting times are getting longer and there's pressure which is also visible to the people and inhabitants in Austria. Therefore, the demand on private health insurance is increasing. That's one aspect. The second one, we see that due to this fact, also private health expenditures are increasing year by year. And on these private health expenditures, the penetration of insurance, of private health insurance, is still low. So therefore, as a combination of these two facts, we do expect quite significant growth the upcoming years on the Austrian health insurance market. Why is our position on the market so unique? We are, as you have seen on the chart, the leading health insurance company in Austria, number one for more than 7 decades already, having a market share of 43%, being double of that of our nearest competitor. So market position is really strong and we are prepared for the upcoming growth. But not only that, we also know customers are not only demanding the insurance cover, they're demanding access to care. And that's the key unique differentiation point for UNIQA. We are running private hospitals in Austria. We are by far the leading provider of inpatient private infrastructure. That's one point. And also on the outpatient business, running in the meanwhile a very relevant outpatient doctor platform, partner platform, where we also can provide access to care for our customers. Speaking about the KPIs, let's have first a look on the in-force business. If you look to the left-hand side of the chart, we do see that in the first 9 months, 2025, we did see strong growth of 6% on the Austrian health business, and we do expect a continued strong growth with a CAGR of up to 7 percentage points until year 2028, growing the portfolio to a size of 1.8 billion. CSM, also supported this year by favorable economic conditions, increased to 4 billion, and also the release increased. As Kurt mentioned before, very long duration business, therefore the speed of release is low, but we are ensuring through this slow release, on the other hand side, a very stable and long-term profit contribution. New business is strong at a margin of 9%, increasing in the recent years, and it will increase in the upcoming years, leading us to really strong also sustainability ratio, currently at roughly 100%. We expect it to increase even to above 115, 120%. So we're really, when we speak about the KPIs on the new business, in a strong position. A bit more detail, how do we ensure to achieve the growth and also the profitable growth? You see on this slide 4 fields of action. I want to highlight 3, which we do believe are core for our success and achieving our targets in the upcoming years. Point number 1, product development. We work this year very hard on modernizing and adopting our products on the outpatient product lines. We will do so in 2026 on the inpatient products. They will become more modular. They will target younger customers, and they will be in relevant parts also online available. That's the core focus on products. Second one, underwriting. In health insurance, as it's such a long-term business, underwriting is key to ensure profitability. So we are very strict and we have a strong underwriting team, But what I wanted to highlight is we automatized underwriting in the recent 2 years. Almost all our sales channels are meanwhile using our automated underwriting. 70% of all underwriting decisions are taken at the point of sale. That's also a much higher customer convenience, and also the acceptance ratio is increasing, therefore, which is helping us in boosting new business. Underwriting is core, it's automatized at UNIQA. Third message, as mentioned before, people are longing for access to care. That's the reason why they are buying private health insurance, and we keep on expanding our high-quality private hospitals. We are opportunistic in acquiring additional hospitals, and we really will boost our outpatient partner platform, which is called Lara, to the next level to really ensure that also our customers get outpatient access whenever they want it on the Austrian market. That's it on health. Let me use a couple of more minutes to focus on the life insurance portfolio. We have on purpose here divided the presentation into the focus on international life business and Austrian life business because it's a twofold story. If you look to the international business, you can see on the chart where we present the infos book, we really have a strong growth on the international life book, mainly coming from the market Czech, Slovakia, Poland, and also Hungary. So we see a growth of almost double digit in the first 9 months 2025, and we do expect further strong growth the upcoming years. We're currently at a tipping point. That means the international life business will outgrow the Austrian life business in the years 2026 and 2027. Very interesting, the business mix is very favorable. The majority of the business we are doing is protection business. You will see it even stronger than on the new business chart, but protection business is dominating the infos book international, therefore it's highly profitable. We do have a CSM of roughly 650 million euro, and the release speed is much, much higher as the duration of this business is lower. So you see roughly 20% release of the CSM on an annual basis. Strong position international. Different story in Austria. You see, despite we having a growth in the first 9 months 2025, overall we expect the portfolio to shrink down to a plateau of roughly 800 million euro. And this shrinking of the portfolio is causing pressure on the profitability of the life book. You see CSM is also a bit of decline. Still there's a strong release, but we need to work hard in the upcoming years to keep the release on a high level, ensuring that Life Austria remains a relevant profit contributor. If we switch to the new business, it's even more obvious. So starting on the international side, we do see that the new business margins are on an excellent level, above 13%, which is also outstanding in the market comparison to the fact that we're mainly selling protection business. We're currently having some headwind as we had a higher release out of the CSM this year, but we will see that very fast our sustainability ratio will reach a level of 100%. We're very convinced because there's still untapped potential where we can leverage product know-how between the markets and really also increase our new business volumes, and in some areas also still improve the business mix and improve the margins. That's international. On the Austrian business, you see our core area of work in the upcoming years. We for the first time see again increasing business volumes. That's a good sign. So new business volumes are increasing, but nevertheless the business mix is not that favorable due to the I would say characteristics of the Austrian market. It's much more traditional life and unit-linked business, and we're having an issue that our margin is currently dropping. So you see the margin is at the end of September 2025 was down to 3.8 percentage points, which is on a low level, and the sustainability ratio is even down to 20%. What we will do, why are we confident to improve the situation? On the one hand side, we have finished a project that was running for 8 years. We have migrated all the contracts, all the portfolio to a new modern IT platform, which is freeing up resources and giving us the capacities to work on new products. Already in the first quarter 2026, we will launch a tranche of up to 5 new products, which will allow us to improve the margin level again in all business lines, traditional life, unit-linked, and also the protection business. So there is an improvement which will be starting in 2026. Nevertheless, our expectation is that until 2028, we can increase the margin and sustainability ratio, but not to a level of 100%, but just make small steps forward. Nevertheless, improvements will be seen starting from 2026 onwards. To summarize, if we combine those 3 areas, so the very strong, sustainable and profitable Austrian health insurance business, the very strong margin business on the international side and our repositioning on the Austrian market, we are sure that health and life will significantly contribute to our revenue growth, especially on the Austrian market through health, on the international market through life insurance business, and we will increase our sustainability ratio from currently 70% to 90%, ensuring that on the long-term run, personal lines business will be a relevant profit contributor to the group. Thank you so much, and Andreas, back to you.
Thank you very much, René. So the summary, the last slide of today's evening, the last slide provides you with a summary of our equity story of a well-diversified and dividend-strong company, dividend stock. So how does it go? First, a very solid position on a very mature, solid home market where our company has been growing at 5% in the first 9 months. Topic number one, providing an upside in this home market on health insurance, as just heard from René, due to the reason he mentioned, on a constant improved profitability on the P&C side. This is argument number one. Topic number two, coming to CEE, you heard from Wolfgang, CAGR of 8%, a very high constant profitability, leveraging Polish and Czech experience, threading throughout all the markets at a very favorable admin cost ratio. Convergency, you heard, and this in the region which is, even in the next years, by far the strongest growing insurance region globally. Option number two, we are number 5 there on the markets, but still some room to improve. Both regions are not only contributing profits, but also constant dividends and cash to the holding, to the group, as Kurt elaborated. Plus, if you have in mind what I told you 50 minutes ago, 55 minutes already, or 60 minutes ago, the green-colored country, Switzerland, we don't talk so much about UNIQA Re, but beside the home market Austria and beside international business, also UNIQA Re provides constant earnings and dividends in a meaningful size to the holding, and by this to you. So this also should underline basically the diversification of our company. We have a very strong solvency position. Kurt elaborated why we keep it in the range of 180 to 230%, but why we are also currently above. A very solid balance sheet, and this is also basically super important, all this contributes to an increased earnings per share of 7% CAGR. So to summarize, what we provide you, what is the gain for you? Basically, not only that we upgrade our targets, which are colored here on green on the left side, but that the base for this upgrade is different from the last year, as you know, so it will be much improved year result 2025, right? What we can promise you at the end, before we're very happy to take your questions, is a very energized company. So 4 of us are representing a team of 7, but many colleagues in this room, Wolfgang, you mentioned Marcin, our CEO in Poland, Ivana, our CEO of UNIQA Re in Zurich, all the guys and ladies and gentlemen from Kurt's team, a super energized company. We're fully motivated. Our trust, of course, gives us a lot of backwind, a lot of support to thank you for this. But you can expect from us to stay humble, to stay focused, because we want to elaborate the whole potential which this group has in the upcoming at least 5 years. Thank you so much for your attention, for not falling asleep, and we are super happy to answer your questions.